And now, without further delay, let's begin today's event, sponsored by Unfito and hosted by American Banker. I'd like to introduce your moderator for today, and that is Mike Sisk. Mike, you have the floor.
Thank you very much, and I would like to welcome the audience once again. We are very grateful that you have chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with an engaging 60 minutes or so of discussion. Once again, our topic today is data, banking, and a better customer experience. And my name is Mike Sisk. I am a contributing editor at American Banker, and I will be your moderator today. My articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy and Business, and Worth. And I am very, very pleased to introduce our three speakers today. Andrew Scott is Global Head of Anti-Fraud and Security at HSBC. Andrew is the business owner for the team responsible for customer identity and access management systems across HSBC's wealth and personal banking business. As a seasoned product manager for global companies, including Microsoft and the BBC, he builds and enables successful digital consumer products by bridging the gap between business and technology, defining strategic objectives and key results, and ensuring that teams work together to deliver these goals. We also have with us Aaron Gemender. He's global head of third-party services at HSBC. Aaron is responsible for creating innovative products for HSBC with a focus on leveraging capabilities from leading third-party vendors from around the world. One of his primary products is HSBC's identity validation platform, which enables the bank to verify a person's identity digitally across every channel. Aaron is a product management leader with over 15 years experience across multiple industries, including finance, tourism, gaming, and large retail. And very, very pleased to have both gentlemen here today with us. And joining them is Yulin Lee, VP Strategy and Corporate Development at Unfito. Yulin oversees strategic planning, corporate development, and business development for one of the leading AI-driven software companies in Europe. And prior to joining Unfito, Yulin was a commercial principal at Faculty AI and part of the Institutional Investor #1 ranked European Industrials Credit Research Team at JP Morgan. So very happy to have all three with us today, and I'm very excited that we'll be talking about the forces that are acting on banking in our increasingly digital world. Research from Unfito has found that 1 in 2 customers would rather open a banking account online than in person. So with customers embracing digital access, banks are in a better position than ever to deliver more personalized, localized, and frictionless experiences. Digital identity is central to achieving this goal, but creating a clear view of a digital customer can require a complex blend of independent identity signals and data sources. So instead of speeding up business, banks can be forced to spend time managing clunky signals that don't talk to one another, and customers are faced with hurdles when they try to open an account or transact. So today we're going to be discussing how digital identity can help make all this more simple for banks and for their customers. And we're going to sort of have a roundtable discussion today. I'm going to be kind of throwing out questions to each of our panelists, and we will, hopefully get through everything. We've got a lot to get through today. Also, if you in the audience want to put a question into the queue, you can do that. We'll try to get to it in the time we have today. If we don't, we'll definitely follow up afterwards. So please, put your question in the queue. We really very much want to hear from you. So let me just jump right in. I don't want to waste any time here today with our panelists. It's really excited to have them here today. So let's start off with Andrew. What forces do you think are shaping banking right now?
Hi, Mike. Thank you. I think there's a few. Some are transient, some are more kind of systemic, if you like. So if we look back at the financial crisis and the response of regulators to that crisis, there's a lot of change in the way that regulators are approaching the market. They're looking at how do we open up the banking services via APIs, how do we ensure that authentication and security around the banking services is as high as it can be, and those are things that we think are pretty systemic and are going to keep going. And then the result of COVID has seen a significant shift away from people being able to visit branches. So, we've seen significant uptick in contact center contacts and in digital. And so I think whilst the kind of the pressure for that may relieve as COVID, we gradually learn to live with it. The behaviors I don't think will, and so we're seeing a number of those changes coming through that we expect to just continue to shift the way that the consumers interact with services. I think the other thing is probably people are pretty multi-bank now, and so when we talk about those API type services, open banking in the UK and various others around the world, those are intended to provide a simple way for customers to be able to interact with all of their different banking institutions and all the services that they get from financial services businesses. So those are the sorts of changes I see.
Excellent, thank you. And kind of zooming in on the customer, how do you think their expectations are changing?
So I guess building off the previous comments, they expect to be able to interact with banks through the channel of their choice. So if we look back at rewind even further, we had branches in most high streets. People were able to wander into the bank and interact with people that they knew. They would be able to have a relationship with a banking manager who probably knew their family because history and stuff, and all of that led to a very personal feeling relationship. Now that's not something that the economics support today, and so our job is to put banks in everyone's pockets, and so they can interact with the banking institution in a very friendly and very comfortable way through a channel of their choice. From a kind of convenience and speed point of view, doing that through digital makes a great deal of sense, and certainly that's the channel of choice for a lot of our customers. And they don't expect to have to go and visit a branch to present identity papers. They don't expect to have to phone up if something goes wrong on their app. They expect to be able to self-serve. They expect to be able to open accounts quickly. They expect to be able to resolve any issues that they've got, and do all of that in a very convenient way through a single channel.
Fantastic, thank you. And just, I don't think I told this to the audience when we first started off. We've got this discussion we have is sort of broken into 5 different sections. And this first section is on the changing world. And as you can see, we're leaning very heavily on Andrew for his expertise here. So one more question in this section for Andrew. Do you think these trends are here to stay, or do you think we're due some sort of reversal?
I think most of them are here to stay. I'd be interested actually in Aaron's view on this one as well.
Yeah, I mean, I think I can agree with you. I think COVID accelerated some of the changes that we've seen in the last 18 months, but nothing was out of the blue. Nothing came out of left field or something we weren't expecting. It just got a little bit quicker. But I think the trends that Andrew talks about, that ability for customers to interact with their bank the way they want to and the way that is the most convenient to them, I think was a trend that we were seeing for years beforehand. And I don't think that's going to go away anytime soon. I think there is still a role for physical access to your bank and for branches in the future. But I think that being your only source of interaction is long gone. And we know, as Andrew said, that ability for you to have a bank on your phone in your pocket gives you tremendous access to your money anytime you want to.
Excellent, thank you. So at this point, actually, let me stay with Aaron here. We're gonna move to section 2, role of identity and experience. So let me ask you, Aaron, what's the importance of digital identity for HSBC?
I think it's of paramount importance, if I'm being honest. I think the ability for HSBC to be able to verify a customer in a digital way is absolutely vital. That removal of that old manual verification process, again, that going into a bank branch, handing over a piece of paper and asking somebody behind a counter to say, is this a genuine document? Does this person match? Is long gone. And I think it will be a welcome change for large organizations. That ability for us to enable a customer remotely to verify their identity, to confirm that they really are who they say they are, just unlocks a world of possibility for us. There are so many checks that we do on our customers when they onboard an account, when they're accessing their money, but it all starts with that fundamental question: are you who you say you are? And can we ensure that we are talking to the right person and establishing that right level of identity and for our various customers? I think that becomes really important.
Interesting. So Yulin, let me pull you into the discussion here. Does all that resonate with Unfito's view of the technology?
I think so. It's interesting. I use the word trust because I think for us, digital identity is all about generating trust, not trust for the sake of trust, but trust so that the interactions between the customer and the business is much more positive and you can have much better customer experiences. And the trust does have to go both ways. So as I mentioned, the businesses have to trust the customer and that they are who they say they are across the customer life cycle, not just at the beginning, but also at moments of high risk or an account takeover or so on, so that they're able to transact and do what they need to do in a seamless way as possible. I think everyone's been in the experience where they've tried to do something, actually account's been blocked, now you have to be on the phone or go into a branch, and that kind of customer experience, I think, is just no longer acceptable by customers. But the second part is that customers also have to trust the businesses, especially when it comes to things like security and privacy. And I think in that way, the banks do have an advantage in that banks are seen as trusted entities and that they're not selling your identity on, for example. But security and privacy are just becoming much more important for customers and is being discovered and discussed in the media a lot more. But also, actually, similar to what Andrew was saying at the beginning, it's also just a much bigger deal for regulators. I think the Wild West of lack of regulation around identity security that maybe have been around for a long time before, that whole environment has changed in both Europe and the US and other countries over the last few years.
Thank you, Yulin. Excellent. And so let me turn back to Andrew for this next question. So customers want to do more on every device. How do you meet their expectations while still maintaining high security standards?
So, as Yulin said, the regulators, let's take PSD2 in the UK, that's forced a real focus on multi-factor authentication, and so there are some things that we can do with, like identifying the device and whatnot, and making sure that we're protecting the environment that the customer is interacting with us in. Malware and the sort of types of attacks that we talk about there, but the other thing is, how do we build that confidence that allows us to trust the individual on the other end of the screen, however big that screen is, right? And I think the way that we're approaching this is really around the multiple signals and how do we capture those in reliable ways and interesting ways, and then once we've got once we've established the confidence that we have with that customer, with that particular session, then to be able to respond to that. So if the confidence is low, then what do we do? How do we increase that confidence? If the confidence is high, great. How do we take friction out of the way of the customer? We have this sort of occasional conversation about synthetic friction, the idea that we are so confident that the person interacting with us on this particular device at this particular time in this particular way is our customer, that we feel like we need to put some friction in the way of them, maybe ask them to do something just so that they feel better, not because we need it for our confidence. That's a long way off. We're not there yet, but that's the kind of thinking that we've got, is how do we use all of these signals and all of these indications that we can gather, and use those in a way that allows us to just remove friction wherever possible, and then only introduce it when we need it. And I think that's when we talk about the expectations of the customers, we expect them to be able to do everything they need. And we've seen this when we've made improvements on our app. The the shift between the number of times that people log in on a browser and the number of times they log in on a mobile device, that tilts, but it's not linear. So the friction involved in logging in on a browser is typically great. You might do that occasionally, every few days or whatever. When we have a really good mobile experience with really good authentication experiences around that and good journeys after authentication, we see logins on a daily basis, or even more, because frankly, while banking may be boring, people's money is very interesting, and the easier we can make it for them to be able to see what's going on and check their balances and see whether transactions have happened and all that sort of stuff, the better. And so when we talk about putting the bank in your pocket, we're not just replicating what we had before, we're making it much better and much easier for our customers.
Interesting. Thank you. All right. Okay, that sort of brings us to the end of our section 2. So our section 3 is going to be more fraud specific. And let me kick it off with you again, Andrew. So we've spoken a lot about customer experience, but verification ultimately is necessary to stop fraud and comply with regulation. Have the past 12 months been quite turbulent, and what were the most challenging aspects of the last 12 months, I guess, is the question here.
Yeah, and it's true to say that through and if we extend that to maybe 18 months, right, and we look at the impact of COVID, people who had never banked online suddenly started trying to bank online, and that meant that all of the identity verification steps that we've kind of been discussing at a high level became crucial, because suddenly you've got a lot of people who are genuine customers who are trying to connect through channels that they haven't previously connected on, and a lot of fraudsters looking at this as a massive opportunity and diving in, either trying to scam the customers or trying to kind of set up accounts, register accounts on behalf of customers, so that they can defraud them. And so there's been a lot of this sort of challenge, and that's global as well. And so I think we sort of think of this as a bit of an arms race. The fraudsters will try something, they'll find a pattern that works, they'll exploit that to the best that they can. We'll detect, the banking industry generally will detect that. We'll find some way of addressing it, and then either they'll move on to some other institution that hasn't addressed it, or they'll find some new attack vector and try that. So it's been pretty full on, and frankly we expect it to remain pretty full on. But as we introduce and then iterate on the controls and the experiences that we can put in place, the controls that those experiences contain, then we're seeing significant shifts in fraudsters' behaviors, and positively, right? So that's great. With our ability to respond, identify, and respond to those challenges, and it's all driven by data, right? I mean, we're talking about data here, so it's like, right, where's the fraud happening? How's it happening? What can we do to eradicate that? And where are the attack vectors and whatnot? And so we have as you'd expect, teams of people who spend their time tracking this stuff and looking at the empirical data, looking at the data that's happening elsewhere in the industry, and bringing all of that together.
Yeah. The term arms race really does resonate here. So what have your strategies been for dealing with the influx, Andrew?
So I think we've looked at kind of accelerating the ways of the the ideas and the kind of concepts that we've had around for a while of like, okay, well, maybe we could do something with that. We've just got a lot better at picking those out and getting them in places, trying them, and then looking at, okay, how do we replicate that? We're a global bank, right? We operate in 30 plus countries in our space, and 60 plus countries across the whole of the bank. And so our ability to do things globally that are able to be flexed a little bit in markets, and in some cases that's through regulation, in some cases it may be through some just differences in the way that the consumers expect to interact with banks in those markets. I mean, there's not a lot of that, but there is still a bit. But typically, regulation changes in different markets, and so our focus has been looking globally, driving and accelerating global solutions, and then making adaptations where necessary in the different markets, but only really where we have to.
I think like just jumping in here, like HSBC, we've definitely also seen an increase across all of our clients. I think Experian reported that they had seen a 33% increase in fraud in the first 3 months of the pandemic. We saw a 41% increase versus the previous year across all of our clients in terms of fraudulent attempts. But actually, interestingly, not all fraud is equal, like Andrew was saying, and actually the really sophisticated fraud was dropping. There was just a lot more amateur attempts from people who now see this online channel as an opportunity to see whether they can commit fraud. And actually the patterns also shifted. So it went from sort of Monday to Friday fraud, like 7 days a week, a lot more because you don't need to come into a branch to open an account. So we were seeing a lot more attack vectors from countries outside the UK for UK bank branches or vice versa. So it made fraud a lot more global in that respect as well.
Wow, that's very, very interesting, huh? So people are just sort of testing it out. Like new people are just seeing if they can be fraudsters on the weekends.
Well, fraudsters are also very opportunistic. That's and looking for areas where there may be vulnerabilities and then attacking them.
Interesting. Thanks. All right. So this next section, we're gonna next two questions I've got are kind of about dealing with multiple signals. So. Aaron, let me turn to you. So identity verification is a complex beast with many signals coming from multiple vendors. At HSBC, how do you cope with orchestrating all of these different sources of data?
So we've built an internal identity verification and authentication platform that enables us to try and tackle some of the problems we're facing. I think you take a complex, as you describe, a complex beast that is digital identity verification, and you then marry that with a highly complex organization like HSBC, and it could be very overwhelming very quickly. The view from our side is, from the very beginning, we set out to create a multi-vendor, multi-channel, multi-market product where we can offer the best-in-class service to a customer based on where they are and where they're from and the type of documents that they're going to provide us, to ensure that we can verify them in a really secure and really easy and customer-centric way. So yeah, it's something that from our side, it's always been, how do we get to the point of creating an internal product that enables us to offer this really easily, really seamlessly, and how do we, again, balancing the complexity of our own organization, how do we make sure that this platform is simple for our internal consumers to use, simple for them to maintain and to leverage and benefit from, while at the same time offering, as I say, the best in class of what we can get from the industry. And it's working with companies like Unfito that enable us to offer, these kind of aspects to a lot of our customers around the world.
So Yulin, what would Unfito's advice be for businesses that are considering integrating multiple signals?
So we definitely agree that layering signals and having these multiple signals is the right thing to do. Customers are all very different. and they have different needs, different requirements, and also face different types of customers and different types of fraud. So we think this is a type where regulations have put these guidelines in place, but customers should adapt their approaches for both the types of fraud and identity needs they have, and also, as Aaron said, the type of organization they are as well. From our point of view, we think you shouldn't need to be asking users to take very active verification methods for every single action. I think that level of friction can feel too high. So you use them when they're necessary. So definitely at the beginning, because you're trying to get to know this customer. And then if something is triggering that you need to have a stronger action, and then that's when you can bring in these automated methods like document and biometric verification and biometric authentication. And that's actually a much lower friction thing to do than, for example, having to call or go into a branch. But we think it is really important to bring in these passive measures so that you are more confident on when you need to be able to do this trigger and able to do passive authentication for the lower risk actions, so that you're not always just bringing in the strongest thing you have. And we also think with multiple signals as well, as the market moves, other things that we as an industry have become reliant on a few methods of authentication, and obviously sending an SMS is one of them, and other ones such as like asking knowledge-based questions, mother's maiden name, or some question you answered a long time ago. But I think the industry will need to become a bit more sophisticated, especially as we were talking about fraudsters before, that actually when the trigger and the attack vector, I think needs to be better linked. So if you think someone's phone has been hijacked or they're being coerced, then to actually do different methods than just the same methods again and again. So we think that this is a really exciting place to be. There's a lot of different signals, and we're seeing this evolving and becoming more sophisticated, both in terms of being able to reduce friction for the customer and also be able to increase robustness through using the right methods.
I think something to
comment on that,
touch on there very quickly. Oh, sorry, go for it, Andrew.
Go ahead, Aaron.
Oh, yeah. I was just going to say something that I thought was interesting there is that from a customer experience point of view, I think we've seen in the past moving away from things where I know you mentioned things like knowledge-based authentication questions, and I mean, we've done internal research. I don't think there's anyone out there that still likes doing that or thinks they are strong enough anymore. It's the double negative for us. It's the customers hate it, and it's not really that secure and open to massive amounts of social engineering. But I think, and that's the key for us. It's how do you create something that is as secure as can possibly be, while still offering a seamless and really easy experience from a customer. And that's one of our key drives and key focuses.
Yeah, exactly. And I was just going to comment on the fact that knowledge-based stuff typically results in both a relatively weak control and also a lot of friction from people who have forgotten their favorite color, or their first car, or those kinds of things, right? And so I think the sophistication of the types of controls that Yulin was describing, and also the sophistication of when to use them, is really key in the way that we're approaching the sort of the roadmap of work that we are doing.
Yeah, I think my favorite color changes day to day, so those are challenges that are tough for me. So we've covered a lot of ground in the last 30 minutes. But I would love to do a little roundup here with everybody weighing in. Let's start with Yulin. What do you think the biggest challenge to digital identity and access will be in the next 5 years?
Gosh, what a big question. So I think, to be honest, the last 5 years have been day one for digital identity and access. This is cat's out the bag. We're not going back. But I think the goalposts will continue to shift because customers always want more, they want it faster, they want it better. With fewer barriers, more services, I think we will see as the onboarding becomes currently is a focus on what people are looking at. I think we will also see a shift to authentication, and much better what I call unhappy paths. So if you've lost something, or you don't know your password, or your account's got dormant, or so on and so forth, currently some of these paths are still incredibly painful and haven't had quite the treatment that onboarding has. And I think we will see banks and also digital identity providers trying to minimize friction across the entire customer lifecycle to provide the best experiences at every single point.
Excellent, thank you. I don't know if maybe I asked that question. Did I say last 5 years? I meant to say the next 5 years. I'm not quite sure. I was rethinking how I said that question. Anyway, the next 5 years is what we're interested in here. And Andrew, how about your thoughts on this question?
Yeah, I think Yulin said it really well. We're taking a service design approach to everything we do. So we're looking holistically at kind of an end-to-end interaction with a customer. What are they trying to achieve? What are the various channels that they might use during that? Typically, it's the unhappy paths that Yulin's mentioned, where the majority of the friction comes in and the majority of the pain. If we take a kind of a fraud scenario, what we're looking at is, right, how do we get the confidence to, we have sort of yes, no, maybe, right? And at the moment, the maybe thresholds are set around, our fraud concerns, plus also the sort of the friction concerns, plus the kind of, minimizing false positives and false negatives and stuff. And so that can end up with a lot of referrals, which, you end up in a position where humans have to get involved, and that's just really slow, and it's really expensive, and it's frustrating for customers. And we've talked about customers' expectations. They're not going to hang around. Why would they, right? There's 100 other institutions who they can go and get their services from if they want to. So the onus is on us to make sure that we are removing friction wherever we possibly can, using complex and sophisticated sources of information, but presenting those to our customers in a very simple way. And as Yulin said, passive is good, right? If the customer doesn't have to interact, doesn't have to do something specific and explicit, then that's great if that helps with our confidence. So I think over the next 5 years, it'll be a question of building up the ways in which we increase our confidence, building up the sophistication in which we apply those mechanisms, the building out of the interaction of data, so that we're pulling together all of those signals in the right place to be able to make those decisions, because there may be things that happen in other channels. It's not just a digital channel, right? The customer interacts with us in various different ways, and I think pulling all of those together, eliminating friction wherever possible, focusing on those low frequency, the unhappy paths, the low frequency stuff where a little bit of friction is okay, but we need to manage it, and doing all of that, thinking about the customer in a in a service design way.
Fantastic, thank you, Andrew. Aaron, can I ask you to give us the last word on this?
Yeah. So I think from my side, what becomes interesting is we live with a mantra internally, which is, what are we doing to make it, really easy for the good guys and really hard for the bad guys? And I think that's something that I think is only going to continue to grow over the next 5 years. I think everyone's spoken about, the unhappy path, and it's always been that mantra for me from a product management perspective, that your unhappy path is where elegant products live. And the best products are the ones where you're going to have an unhappy path, and the ones that handle that in the most elegant way are the ones that people will remember. Honestly, though, from an identity verification perspective, I think some of the challenges we're going to face in the next few years, Yulin touched on the fact that we're very early in this process and very early in the capability and technology. I think the technology is only going to continue to improve and grow. We're spotting from our side the real challenge is document verification. Facial recognition is becoming more commoditized. More people are doing it more regularly. The document verification process is the one that's going to be really tricky to maintain and keep getting right. And we're seeing governments around the world that are starting to step up as well in terms of offering digital identity platforms like SingPass in Singapore. And I think the more governments start to pick up on that and start doing that, I think that will be very key for this process. And yeah, I eventually see a world in which, why do you need a password anymore? If you've got, biometrics that can be verified and we can do it in a really quick, easy way, we know you are who you say you are. Why do you need to enter a password every time? I think that's what we're moving towards.
Perfect. I think that is a excellent note to wrap things up on. I want to we've covered a lot of great ground on great insights on a very important topic. So I want to thank Andrew and Aaron and Yulin, all three of you, for being here today and sharing your thoughts. And I want to thank everyone in the audience, of course, for being here as well. As I said, we will. If we didn't have time to get to your questions, so we will definitely follow up afterward. Thank you for putting those questions in there. We'll be sending you a follow-up email that'll have a link to a recording of this event. So that will be coming your way. Keep an eye on your inbox, and you can kind of review all this great content. And with that, I think I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.